And we are live. So, guys, welcome back to the SMB show. Me and Mike have decided that we're probably going to do these twice a week now. Don't hold us to it, but we're gonna we're anticipating doing them twice a week anyway. We'll see how it goes, right, Mike?
Absolutely. But first things first, it's coming home. Okay.
Um, I don't know. I'm not convinced. I'm not convinced. Do you think?
uh, you know, I don't know. Honestly, France look good, don't they? But we'll basically turn it into Jason. Was it Jason Cundy and Jamie O'Hara instead of the M&A world?
Yeah,
All
we'll
sport.
just this into a football show. I don't know. I think that England are playing FIFA in the semis, so um, so
Yes.
we'll see. We'll see. I don't know. I'm not convinced. It would be cool, me being Welsh. I still wouldn't mind England winning it. We'll see. But the only problem is if England win it, we'll just never hear the end of it. 50 years from now, we'll still be talking about that time in 2026 when they they beat Norway in the quarterfinal. Uh,
It's true. If you think about it, it's literally the worst set of fans. You've got all the Arsenal fans, all the Spurs fans, all the Man United fans, all the Liverpool fans, all coming together, and then to create this, I don't know, amalgamy of awful fans. So yeah, that'd be fun
yeah,
for everyone else.
exactly. So I don't know. I don't know. We'll see. It's going to be an interesting week. I don't know. I think France. We'll see what happens in that game, right? But I know France look a bit too dangerous for everyone. We'll
They
see.
look very good. They look very good. Yeah.
Well, we'll know in a couple of days' time whether this should be a football show or not. We'll see. But cool. Well, today we've got a few things to go through. As usual, this is the best place to keep you guys up to date on anything going on in the SME world. There's a lot going on, and I also think it's important to talk, about what's going on in private equity land as well, because it does affect what's going on with small businesses. We talk about both. If you're here for the first time, we talk about both UK and US, and the how those how they link together as well. There's a lot going on, a lot of cross-border transactions happening as well. So I think a good place to start is, as I suppose, private equity is a good place to start. They've been, aggressively hunting UK assets. There's been some pretty big deals that's gone on over the past couple of weeks. One of the biggest US private equity firms, Apollo, initially made an unexpected, I think 5.7 billion takeover of EasyJet. They outbidded somebody else. But I don't know, the way I look at this, I don't see this as like an airline story. I think I've seen a bit in the media around it being an airline story, but I think this is more of like another signal that global investors, particularly the US, are seeing the actual value in UK businesses and seeing them as undervalued assets, because we're seeing more and more of this. Where I think is overseas private equity seems to keep writing these, $1 billion or £1 billion checks into the UK. So I do feel that they are looking at the UK as undervalued assets. Obviously, there's a lot of turmoil going on in UK politics at the moment, which makes things a bit uneasy, concerning, and volatile for some people. But these are the times where smart investors see unrealized, untapped value as well. And I don't know, the Financial Times recently wrote an article on UK M&A. I think UK M&A has now reached over $320 billion so far in 2026. So, and most of that's driven mostly by overseas buyers as well. But there's a lot going on, right? We've seen Comcast. Well, I guess it's Sky, but Sky are owned by Comcast, right? They've acquired ITV's, like the broadcast and streaming part of ITV, that sort of division. That was another like $1.6 billion transaction as well. So if you look at those two, if you combine ITV's X, which I never watch, so I don't actually know what's on there, but I guess people watch it, otherwise they wouldn't have bought it. ITVX, and then you have the Sky's media assets as well. You combine those two together, it basically creates one of the largest commercial broadcasting groups in the UK. So, and we talked a bit about this last the last show about consolidation being the big M&A play and where a lot of the value is at the moment. If you look at this one, this is, of course, about scale, but there's the other plays here: content ownership, distribution. There's going to be some cost synergies, no doubt, there as well. But I think that there's a lot going on at the moment, and people are seeing the UK as undervalued. And all of these industries, and all the industries continue to mature, consolidation is going to become available across everything. We're seeing it more and more at the moment. And the same principle, to relate this back to the SME world, it applies to those fragmented SME sectors as well. There's huge opportunities across, HVAC, energy solutions, plumbing and gas, fire and security, waste management. There's a lot of untapped value in the UK for those who actually want to move aggressive over the next 2 or 3 years. This opportunity is probably not going to happen again the way we see it at the moment. We're even seeing UK legal get involved in this. It was, Knights, they're on a huge aggressive consolidation mission. I know they've recently secured another 60 million, specifically to continue to acquire more regional law firms as well, which is another, I would say, a clear example of a roll-up strategy being executed quite, perfectly. They're buying up smaller firms, integrating them into their existing ecosystem, creating that scale, improving margins, and it's the exact model that many acquisition entrepreneurs should be looking to replicate at the moment. I know what your thoughts are on what's going on at the moment, Mike.
Yeah, I think in the UK, I think stock's really low in terms of businesses, right? I know we spoke about this last episode, but over the last 5-6 years now, since COVID, everyone's been moaning about the UK. A lot of Brits like to moan about the UK, and it has been hard for people, So I think it's just been I don't know whether it's a bit planned, as people like manipulating the market at the top level, but it feels, I don't know about you, but it feels a lot of the social media and propaganda now as well is it's become very Americanized in itself, and it's riling things up a bit, both sides, and I think it creates a perfect storm to get cheap assets. Maybe some of the larger PE guys and whatnot are just getting their positions, which is a smart thing to do. People make money in downturn, don't they, in crisis? Yeah. So it's sort of been that the last few years, without being too dramatic. But it feels like a good time. It does feel like a really good time to come out of all that as well. Yeah. Until the next crisis in 10 years.
Yeah, well, the way things happen at the moment, the crisis seems to be manufactured. It's like, well, we need to manufacture a crisis. We'll post something on X, get everyone slightly concerned, move the market, and then buy cheap assets. But I think that you made some good points.
On that, the main instigators are usually like Trump and Musk, right? I quite like Musk. Some people don't, some people do, but he's obviously coming into UK, sticking his nose in UK politics as well, and it just feels like they trying to, something trying to be orchestrated many times over. You look at Trump, just I'm not on X that much, to be honest, but just every day I just see the notifications. Trump's done this, and it's like he's the master at it. To be fair,
Well, if you look at history, especially like the power grab, I don't know if you've seen the Murdoch documentary on Netflix. Have you seen that?
I haven't seen it, actually. Sorry, you did say to watch. Yeah.
It's a really good documentary. You see how obviously Rupert Murdoch, obviously he's Australian, come to the UK, managed to capture a crazy amount of power purely through acquisition, buying the media, and then going to the US, doing the exact same thing there. And now he's probably been involved in, I don't know how many, I would say, heavily involved in the political campaigns and who ends up sitting in the big seat. He has like a crazy amount of power because he owns the media. And I think he was actually the first person, it said on the documentary, something around you weren't able previously to own a newspaper and a news channel. And what it looked like in the documentary pretty much lobbied the government to allow him to do it. And he captured a crazy amount of power from doing that. So, of course, acquisition, when you talk about power, that's talking about power on a completely different level. But when you're looking at, say, an SME, you're capturing power of, purchasing power. You're capturing geographical power. There's so much that you can do when you expand into new markets and do different things. Just through acquisition, you can do it very fast. So when you look at the Rupert Murdoch situation, he rose to pretty much the top very quickly through acquisition and power moves. You can do the exact same thing on a much smaller level with M&A. And I think that the fascinating thing about acquisition is you can go from controlling like a £500,000 company to something that could be worth £50 million in enterprise value in the grand scheme of things, quite a short space of time if you do it right and you have an actual acquisition strategy. So I think that's where where you can really unlock that value.
Or if you're in certain sectors that we've explored recently, that'll be the valuations as it is, as you said there.
Yeah. So yeah,
it's probably more. It's actually double that in the terms of the multiple. Yeah.
Yeah. So recently, me and Mike spoke to someone that they had a valuation of, was it like 300 times earnings apparently?
Yeah.
Well, that's
just over that. Yeah.
Yeah. Well, we we don't know where the valuation came from, but that's another thing I think that people need to really think about is, what somebody wants and what somebody gets, or what something is worth is dictated to by the market itself. We've seen instances in history where people have paid 100 times earnings or 100 years earnings for companies because of what ecosystems that's coming into. So there are going to be some cases where people will pay up for businesses, but then Microsoft did it with like GitHub, LinkedIn. They paid up for those. But when you're talking about like a single platform acquisition, to get, it really depends what it is, right? That's the thing here is when people say my business is worth X or someone says something's worth X, then it really depends on the situation, the business, who's buying it as well. I think that's where I think a lot of the valuation gap comes in when you're working with brokers, because a broker's looking at a company and being like, we could sell this to a strategic acquirer and they're going to pay up 7, 8, 10 times for it. But then you have someone who's a first-time buyer, or maybe their first bolt-on, they're not going to pay for that. So you have an expectation in a seller's mind versus the realism in the marketplace. And we know ourselves that those sort of institutional buyers or institutional minded buyers, yes, they're going to pay up, but they're not just buying anything, and they're not going to pay anything for it as well. So I think those are some of the things that if you're selling the business, you need to really think about. You need to make your business as commercially appealing as possible before you take it to market, if you really want to get someone to pay a premium for it. No one's going to pay a premium for something that isn't worth the premium, okay, unless they make a mistake. And then I suppose on the back of what you was talking about just then, about when we talk about undervalued assets, and of course there's a huge amount of capital that's been raised in private equity, especially since I think around 2006 has outperformed the public markets. So you look at your more savvy, sophisticated investors, are they going to put their money into the public markets, or are they going to put their money into private equity? And what we've seen, especially over the past 20 years, is a lot of people have chosen private equity purely because it's grown you're getting a much better return than you are in the public markets, unless you get into something early and you get, your early investor in SpaceX or one of those companies, right? So we're seeing a massive shift over the past 20 years. Now, I think what the private markets have done a great job of is your retail investors haven't been able to have a lot of the same access as they have to the public market. So you can go on, if you're in the UK, Hargreaves Lansdown today, set up an ISA, you can go and invest in Tesla if you want to, right? But if you want to get access to some of the private market deals, it's a lot harder to do. The great thing about this is you can become the private market yourself. The barrier to entry is a lot lower. You don't have to go and invest in, say, Apollo, who we just talked about, or KKR, or we don't have to go and invest in those companies if you don't want to. You can become the company, okay? Because you can do this yourself, which is, I think, is super powerful. Now, when it comes to the capital that is available, I do think, and we're seeing this right now with some of our clients, the funding market is becoming much more specialist. So I think if you're talking to just one bank, and one bank only, you're probably not going to get the best product for what you need at the moment. I think it's important to test the market, really work the lenders. Now, don't don't just go out there and just give it to everyone, because also that can do you a disservice, because you want to just float the company or whatever acquisition you're looking at across the entire market, because people are going to probably get quite scared to fund those sort of deals. But what you do need to do is you need to be working with someone that really understands what it is you're trying to do, and they're putting that deal in front of the right lender. You need someone who's specialist in the sector, or someone that really understands what you're trying to achieve. I don't know what you're seeing, Mike, but that's kind of what I feel people need to start really thinking about before they just put it out onto the market or try and do it themselves.
Yeah. So it's worth speaking to a few brokers as well, and some yourself as well if you can find them. But generally, brokers, I've found, I don't know if you think the same, they obviously have the relationship with lenders, and this is from a broker. He said, look, if I'm putting through 50 deals a year with one lender, my account with that lender is better than, say, another broker who's never used that lender before. It kind of built up a bit of credibility with that lender, so I'm more likely to get approved with that certain lender than this guy who hasn't used them that much, for example. It's so weird with business finance. There's lots of moving parts as well, obviously. There's all sorts. Like we've had it, gone to say 3 brokers. They've all tried the same lender, and one of them got approved with it. It's a bit strange business finance in the UK, especially. Like I said, it could just be a relationship thing. It could be how they've done the application through. So look, I mean, many years ago, we went through about 300 brokers, didn't we? And then sort of got our select few and sort of started working with them. And just to get funding through on some deals. So, and then obviously the ones we use got the deals through basically. So we continue to use them. Yeah.
Also, I think that people are becoming a bit more aggressive in that market now. There's an SME lender. I seen an article about it the other day. They're called Recognized Bank, but people are calling them the Decisive Bank. Their loan book's grown by almost 50%. They're really, they're trying to be the faster, more cleaner SME lender and they're sort of committed to trying to provide that better service. But then even like Funding Circle, right? I know a lot of people try to look elsewhere. They say they're expensive. You've got to think back in COVID, when it comes to like the RLS product, they was, one of probably the easiest to go to at the time. But they've just gone through, I think there's like their 10th public securitization, another 2.5 billion pounds that they're going to now issue into the capital markets. So when you think about unlocking additional funding for UK SMEs, the market's definitely more hungry for deals. Of course, they're looking for the right deals. I think, again, this is where that deal structure comes in. It's very important. They're not just going to underwrite badly put together deals. That's just not the case, right? It's not. You can't just go online, find a business that's just listed publicly and be like, this is what they want for it. 9 times out of 10, that's not going to work. There needs to be some work around deal structure and understanding what it is, and then also making sure that you position yourself correctly to the right lender. Like we've had it before, where someone's gone and decided to use a broker that someone introduced them to. They put a construction deal in front of a lender that doesn't mess around in construction. Of course, that's going to be a no. You've got to really understand what it is you're doing to get the best outcome. And even if you can't get the exact best outcome, you want to put yourself in a position where you're able to get almost the best outcome at least. I think that people rush the process. I think that by spending a bit of time making sure that you have put together, have a well put together deal to present it in the correct manner, it goes a long way. So I think that's a big one. And if you are looking for acquisition finance or growth capital, I think that's a big thing to consider. If you do need help with this, you can contact us at 5dcapitalpartners.com. This is something that we help with, making sure you are putting your deals in front of the right lender, and also making sure the structure's right, because a deal that you would have done 4 years ago is very, very different. That structure is to what you're doing today. The market has changed drastically over the last 5 years. Post-COVID, it's not the same, right? There's different things that you need to focus on to ensure that these deals are going to get over the line. Do you want to add anything? Yeah,
absolutely. And you said about the funding there with Funding Circle. Would they get 2.5 billion? you know, you've got smaller lenders as well, who, again, our broker works with very, very closely. And he was just saying, look, they've got an extra £100 million. And, you know, they're quite unique. They're based in like Southwest or something. That's just the area they focus on. And then, you know, even like SBC, like I think every year they literally top up their fund for this kind of for these kind of transactions. So he said, look, just wait. I remember him saying on a deal to just wait till after April, they get a load more funding because they'd used up all their money. It was for the Midlands. So then after April, they just got a new cash injection. It was like kind of easier to put through deals. So we just waited, you know, I'm talking, you know, 2-3 weeks away from that period at the time. So it was a no-brainer, and they had really good finance, to be fair. But again, like we couldn't have, I don't know, but you know, the fact that the broker was there helping us and our client get through it, they got the money and got a really good interest rate, right? It was like 8% or something.
Yeah.
So 7-8% or something like that. So yeah, it was a good one.
Yeah. Next interest rate decision's 30th of this month. So
okay.
We'll see. We'll be covering that live, guys. So keep an eye out for that one. It'll be an interesting one. We may even get somebody on as a guest to discuss what happens once we see that decision as well. Obviously, it's at 3.75% at the moment, and it's been held there since December. So it'll be interesting to see what direction that goes in, and also how the markets are reacting to the current political landscape. You know, things have changed over the past couple of weeks. PM has resigned. There's a lot of anticipation of what's coming and what's next, you know, and what direction the country is going to go in.
Well, you were quite upset about that news, weren't you? You had to spend a few days in bed.
Well, you know, like I don't know what to think about it, because obviously I think Keir Starmer did an absolutely awful job, but I don't know that if Andy Burnham's the guy for the job either. It's like, you know, I don't know. I feel that the uncertainty. We'll see how the City of London react when look. Obviously, the bond markets are something to focus on, but I don't know. I feel just when you feel like it can't get any worse, sometimes it gets worse. So we'll see. We'll see what happens. Right. So we had a few questions come in right at the end of last week's session. So I've picked 3 which I think are going to be useful. If we put them across the bottom there. So the first question is the new £2 million GGS government-backed loan the best, fastest, cheapest loan to buy a business? So first of all, it's absolutely not cheap. It's not fast, and it's definitely not the best. It actually could possibly be the worst. So the GGS, it does have a maximum facility up to £2 million. That's providing the group turnover is below 45 million. Okay, so that is the case. But what happened is the government guarantees part of the lender's loss, not your loan, right? You still remain 100% liable for repayment, and the lending decision is still made by the bank under the normal underwriting process. Okay, so don't just assume that this replaces personal guarantees, because it doesn't. All right, it does depend on loan size. It depends on what security is available. Again, the deal structure is important. And the business needs to have very strong financials, right? Your cash flow is more important than the security. And of course, the debt serviceability is definitely going to be key, as it always is. But you have to remember, right, the government guarantees or protects the lender, not the borrower in this situation. It's a government-backed loan to protect the lender. Also, the GGS isn't new. You know, it replaced the recovery loan scheme, which was the RLS, 2 years ago. But actually, I said 2 years ago this month, actually. So, and the RLS was actually a replacement for the CBILS loan, which was a replacement for, it was called the EFG, which was, what was that called again? Enterprise Finance Guarantee. These are all just rebrands of similar government-supported loans. So, as I said, you do need, the right debt facility for you when you're looking at funding for the deal that you're working on. It has to make sense. So just because you see, people posting now, GGS, this is, the next best thing. First of all, it's not new. It's been around for 2 years. Okay. It's actually been around for a lot longer because of all the rebrands, right? And if you speak to anyone that's used this, all of them don't think is a very good option. Okay, we know people ourselves now are trying to refinance off this, so it's not the best option. Just because it says government back is absolutely nothing like the SBA loan in the States. Is not even close. So I know people are sort of pushing it like this is similar to the SBA. It's not. It's nothing like the SBA loan. Okay, so yeah, I don't know if you have anything to add to that, Mike, but.
Well, yeah, up on the £2 million there. Like I've never seen anyone get that 2 million. You know, it's not so seems to be around, I don't know, 250, 500 generally, right? I don't know if you've seen anything.
Oh, I've seen a few people get around the 500. 250 seems to be like the sweet spot. But it's worse than the RLS. The RLS, you get 250 unsecured. Not easy, but it was a lot easier. That this feels just friction after friction. It just feels very difficult for people to get stuff over the line. If you get it over the line, you're paying through the nose on interest.
Yeah, right. And again, I think you need a broker on it. Personally, like the paperwork and stuff and the time it takes. A broker's just easier to smash it through, you know, so to speak.
Well, that's another thing. The paperwork is intense with
Yeah.
GGS. So, yeah, it depends if you've got a stomach for it. Okay.
But again, Dean, on that, if you've got a deal and the only way to get it over the line is GGS, or you don't, right? Well,
yeah.
You know, and it works on the deal structure. It needs to be tight with the numbers and debt service cover ratio and so on. So yeah, it needs must sometimes.
I think that's an important point because I think people get sometimes worried about interest rate. And of course, no one wants to be paying 20% on the cash flow loan, right? However, like you said, if the DSCR is around 1.5, you are paying 20%, but you're getting a deal over the line, you know, in 12 months, 18 months time, you can refinance off it on a much lower or much better interest rate at different debt facilities. So I think that is the thing that people need to think about is if the deal stacks as it is, and you're not going to be under crazy pressure post-acquisition and the business can service the debt comfortably, then, you know, do you want to walk away from it? Or if it's there available, then do you want to push that one over the line? So I think that's a good point. Next one. So I've put X there because I didn't want to put the person's name out there, but someone was part of a coaching platform. They say that they're telling me to solely focus on EBITDA and not to complicate it. Is there anything else I should be considering? Well, firstly, you can't buy a business on EBITDA alone. EBITDA isn't cash flow. So you could have two businesses with the same EBITDA. One business may convert 95% of EBITDA to cash. The other business may only convert 25% of EBITDA into cash because of working capital or CapEx. So the free cash flow and cash conversion percentage is far more important than EBITDA. EBITDA just gives you a good base, and then you have to try and build off that base. So well, there's many things to consider outside EBITDA. You know, there's key person risk, there's customer concentration. It could be deferred maintenance. It could be old vehicles. You also have to understand the quality of revenue as well. There's so much to unpack other than just headline EBITDA. It also tells you nothing about value creation. Okay, so you remember you're not just buying cash flow, you also buy an unrealized value. Okay, think about what are the post-acquisition growth levers. You know, when was the last price increase? You know, even a small uplift of 3 or 4% can have a disproportionate impact on EBITDA. Then what's the current sales process or sales function in the business? Do they have tracking or follow-up system? Do they have a proven customer acquisition channel? So you look at the current EBITDA, let's say is £500,000. You need to be thinking, where's the next £500,000 in EBITDA coming from, and how can you influence it without compromising the quality of fulfillment? So yes, I know people start off with this is the EBITDA, what sort of multiple we're paying on it, but you can't just buy the business just on EBITDA alone. It would be crazy for you to do so. There's so much, there's hidden liabilities and also unlocked or untapped value that you need to consider as well. I don't see anything you want to add to that, Mike.
Yeah, just adding to the sort of payment terms, or it depends on the type of business, right? Because construction is completely different. Some people in construction with blue chip clients sounds great, right? It's obviously great and it's impressive, but they're normally the worst payers. So they might be net 90 days to pay. So you've got to do the materials and the work up front, and then by the time you get your fee, could be 3 months down the line or longer sometimes, depending on who it is. I've seen it multiple times, just because sometimes there's a disparity of like, if it's a relatively like small construction company compared to like a massive outfit, that's just one I've seen before. It's one of the big pharmaceutical ones. You're too small for them to worry about bringing your invoice to the front. So, it could create a bit of a gap there. And another client that we worked with many years ago, we're doing about 600 grand EBITDA, is a sort of manufacturing e-commerce, but it sounds great, 600 grand EBITDA, but, it's quite a seasonal product as well. So summer and winter, you'd have 300 grand tied up in stock, so that leaves you sort of 300 grand cash, but you wouldn't take all that cash out of the business. You've got to pay the owner. So it's like it diminishes that pot, even though 600 grand a bit, that sounds great. Maybe they've got new products in the future as well. They're having to put 100 grand into the new products and create that cash gap as well. So I'm being a doomsday person with that, but you can't just look at it like, 600 grand profit, great, it's going in my pocket. It's not really the case.
No, I totally agree. And we've seen firsthand with a client previously where they had an incredible business, and because they couldn't collect those invoices, they ended up speaking to an IP. And that's an incredible business that, built from the ground up. You're talking 8 figures in revenue with decent margins for the sector, and a rumor put the business under. So, there's so many different things to consider other than just EBITDA. You can't just focus on that, because if you just buy on that, then you're going to end up potentially with some big issues post-acquisition. Okay, so the next one, well, this is the last one for this week. Guys, if you do have any questions, feel free to put it at the bottom of the screen, email the questions to live@thesmbshow.com. We'll get them answered. We're also happy for you guys to, if you are live and you're watching live, you can also dial in. We can send you the link. You can come in, have a conversation with us live as well, ask your questions live. So, that's at the bottom of the screen. Our last question is, should I bring an IT specialist to build out and lead my AI? So, you're probably going to disagree with me on this, but who's
asked that? An AI agency?
So, I don't know. Me and you may disagree on this. Maybe we won't. Do you want me to go first, or do you want to go first?
Yeah, go first. Yeah.
So, I actually personally think that the founder or CEO, MD, whoever it is, should lead the AI strategy. Now, I think the reason for this is an AI specialist or agency doesn't usually understand the business. They don't know why customers buy, what makes them not buy. They don't know where margins disappear and why they disappear. They don't know which employees actually create value, the relationships that those employees may have with customers or relationships within the organization, who's accountable for what at the start. And also, they don't really know what part of the operation is actually profitable at the start, okay? And I understand that there's a process they have to go through. But I think that if you look at AI and what AI should be solving is more about just what's the constraints in the business. So I think an easy example that this would be, a construction business may take too long, quoting new jobs, or a recruitment business spends hours going through CVs and seeing which ones are worth looking at for one of their clients, or maybe a law firm may spend days or hours reviewing contracts. So I think the business leader in the business understands this. So I think that they're the one that need to be driving the direction of the AI implementation. That's in my opinion, right? I think otherwise you have someone who has no idea how the business runs or moves, building systems to improve the business. I think is wild. And I think that a lot of people are doing that. They're like, I have no idea about AI. So I was like, give it to an agency or an AI specialist, if they even are a specialist. You guys streamline my business. It's like, imagine you have like, an F1 team. The driver wants to win races. The engineers build the car, but who decides the strategy, right? The engineers aren't out there building the strategy. The driver and the race, the strategist, they're the ones deciding what strategy the race is going to race. So the business leaders, the CEO, MD, founder, whoever is, they are the driver, right? The IT team or AI specialist agency, they build the engine. So I don't know, usually what happens is the founder just goes out there and says, what AI tools are good? Which ones should we buy? Which I think is the wrong question. And because people feel like they're falling behind, these are the sort of questions they're asking. They want to know what AI tools they should be buying, when really they should be thinking, what repetitive tasks consume, the most management time, what processes delay our cash collection, can we automate them? Or do we need a more relationship based? Do we still need a human in the loop for those? Why do we lose deals? Is it because we're too slow? Can we speed that process up? Or mainly, I don't know, can AI fundamentally change the economics of the business? I think these are the questions people should be asking, which I think that the person who is the business leader, they're the people that should be driving what the business needs and doesn't need, because they understand that part of the business. I don't know. I've seen a lot of people let me into your business and streamline it, and they do more damage than good. Or they automate something that doesn't need to be automated, or they streamline and make something efficient that doesn't need to be streamlined, doesn't need to be made more efficient. So I don't know, I know you're more close to this than I am, but that's my.
No, I agree. In an ideal world, you get the founder looking at it, but also there's time constraints, and it's just maybe just don't really care that much, to be honest with you, like in the schemes of things. So I think if you can departmentalize it potentially and try and get every department, look, your customer service, you're the best person in customer service. How can we use Claude Code to kind of streamline things, blah, blah, blah. But I think maybe potentially work with an AI specialist, but they've got to be a genuine specialist. I don't know. Obviously, I haven't tried most developers. I've tried a few developers. It's still a different skill set to the AI stuff. It's kind of like, it's a bit of a weird cross skill set in my opinion, from what we've tried with people and stuff. I think you need to be a rare breed of like a developer. The ideal person for an AI agency is like they've got a developer brain, but they've also got a business brain, and then they've got the AI skill as well. I think there's almost 3 skills going on there personally. But to get the business side of thing, you're right. Like, you can't just tap in. Let's just say you've done fitness products, previously. You can't just tap into like a construction business. You're not going to understand it, right? So you're right. It's got to be a bit of a team, probably just a team project on that, really. And you're trying to get all the AI specialist needs to get all the kind of knowledge from the company. Now, there are ways to do that with AI as well. I think if you've got training manuals, SOPs, you're recording calls like this, you're transcribing it, what you can do is plug it into something called Obsidian, not to get too technical, but you start building a knowledge base on the company, and you can departmentalize it, and then you link it to Claude Code and things, and then you can you create like a brain effectively of the company. It takes quite a while. It's not a quick process, to be honest with you, but you can start building stuff off that, or plug, like I said, at the HR department into it. This is your little bit. We've built up a knowledge base. Here's all the SOPs. Here's all your training. Here's all the procedures. We've put that into Obsidian. Not to get too techy with it. It's not actually as hard as you think, and start building with Claude Code off of that. You got to be careful on YouTube a bit as well, because a lot of the guys, there's Claude killer, OpenAI killer, and they obviously get paid by their competitor to do these videos. So you've got to be a bit careful. I'd probably recommend stick to one in your company. They're all good. They're all powerful. Depends on preference. My preference is Claude Code, but I know ChatGPT's just brought out a new update, which looks really good as well. But I just focus in on one, concentrate on that. It's a wild space at the minute, but it's exciting.
Yeah, things change every single day. There's a website called Hacker Moon or Hackathon. Someone sent it to me, and a lot of updates every single day. It's hard to keep up with, right? Is a space that is just moving so fast. If something in the morning changes by the night sometimes. So I think that's why it's important to have someone drive the business strategy with someone that's techie. Because, for instance, a lot of like engineers, whether they're software developers or people that mess around with AI, or good at making it function the way it should, I think that they do need a bit of direction and big picture thinking. They're very good at doing the thing. But I agree with what you're saying, actually. I think that there's a lot of people that have just picked this up that aren't from like a software engineer background or coding background, that they've just picked this up. And they are a forward thinker, and they know how to plug that into what works. And I think that AI allows you to do that. If if you get stuck into it. So I think that it's a bit of a mad space at the moment, because on one side of me, I'm like, people are automating things that don't need to be automated yet, and then on the other side of me, I'm like, people are doing it and then they're just figuring it out as well, and it is working. So I don't know. I'm torn with a lot of things. I do think that when you're looking at your traditional like boring businesses, I think that it's a little bit different. If you have like an e-com brand or something, it's a little bit different to somebody that's running an old scaffolding company. It's like, what AI are you plugging in? Yes, you can job scheduling. Yes, you can do the cash collection process. There's going to be things that you can definitely bring AI into to make the business better. But at what point are you like, this is probably need to slow down a little bit here, because my workforce themselves are not going to understand what we're doing.
Yes, there's that too. People worried about getting their jobs replaced. I mean, it always comes down to, right, can you save costs? And it's got to be, if you're using AI, can you save a lot of costs, or can you generate more leads and sales? They're the two things, right, that people care about. And to be honest, it's probably more on the leads and sales in general, it's fulfillment with that. But it still comes down to that. I think the AI thing at the minute is almost saving costs and being efficient on the operational side a lot of the time, rather than the sales and leads. Personally, it seems to be.
Yeah, I agree. I think that, you want to reduce overhead, no doubt, right? But I think some of the things that I've seen people do, they're forcing that reduction of overhead, and then the business is performing worse.
Yeah.
Because like people are trying to just get people out, like remove the humans to save cost. And then we've even seen it now where AI is costing more than the humans. Now, you don't mind in paying someone or a robot or whatever it is more if the business operates better. But if you end up paying more for something and the outcome is worse, what are you doing? And I think that's where you need that sort of crossover between, right, I'm running the company and you're the technical person that understands how to implement this and integrate it into my business. What's the best? What can we do here that makes the most sense? And just to take a few steps back before you move forward. Because as we said, I've seen people just remove people. Well, I don't know if you've seen recently, like Facebook, they sacked like half their workforce. I don't know if you've noticed it, but Instagram, Facebook, WhatsApp, I don't know, especially for the last couple of weeks, I've seen a lot of issues, especially on Instagram and Facebook. There's something not working too good, and I don't know whether that's because of that, because they've kind of just been like, we're just going to use AI for this and I'll figure it out. And it seems to starting to figure it out, but you have the transition hasn't been as good as you would. I think that me as a customer would like it to be.
Interesting, very interesting. Yeah. Keep an eye out for that. Good old Facebook always had good customer support anyway.
Oh yeah, he's always amazing. You could always speak to someone anyway, so it's made no difference.
Absolutely.
So, all right, guys. Well, you have anything else you want to close on, Mike?
No, I think we're all good, actually. Yeah. No, we're all good outside, yeah.
Okay, I got one question for you before we wrap it up. Who's winning the World Cup?
England, of course.
Okay. Okay, we'll see.
Probably France.
Well, you never know. Spain could win it,
Yeah.
So I don't hear anyone say Spain's going to win it, but they're in the semi-final.
Yeah, true. To be fair, if Argentina win it, that'll be the Messi Ronaldo debate over. You're probably a Ronaldo fan, right?
I don't know, because like if you got FIFA on your side, it's a little bit different. So I don't know. So maybe they should. I was gutted that Egypt. I was so gutted, because it's just that's an amazing story. Can you imagine, Egypt being in the semi-final right now? Be an amazing story. So I think the whole world will be rooting for them to win it if they was in the semi-final, apart from English fans.
Yeah, absolutely.
All right, guys. Well, hope you enjoyed today's session. If you do need any acquisition support or exit planning or help with funding your deals, go to 5dcapitalpartners.com. We'll put that across the bottom of the screen. And if you do have any questions whatsoever, email us at live@thesmbshow.com and get those questions in. We can get them answered. If you do want to join us as a guest on the show, give us an email at live@thesmbshow.com and we'll get you on as a guest. We're always happy to talk to business owners, talk to people from the professional services, whether that's your finance broker, accountant, lawyer. It's always good to talk about other people in the space. So until next time, guys, we will, have a good week. We'll see you then.
See you Friday.
See you Friday. Cool.